Hi there. Today we're going to talk about something a bit special. So it's probably something that very few, if not nobody, has talked about. Because over the course of the past week or so, during my regular sessions, you keep seeing all these charts that cryptos, especially altcoins, has been going down, going down, going down with no end. Some of them even breaking their previous all-time lows. And some of you ask in the comments, do I see no bottom to this? My answer is yes, there are always bottoms. But then, what's actually happening right now is something that altcoins or the crypto market as a whole hasn't gone through yet. And for that, we'll have to go back to history. And after that, I'll show you a couple of charts and let you see what exactly is happening, not only to crypto, but also to stock markets as well. So let's get started. So remember when cryptocurrencies came out, including the very first one that came, Bitcoin. I hope you have already been there, or if you're new to the crypto market, you can ask AI or go to Wikipedia. When did cryptocurrencies came out? It was because of the global financial crisis. So the global financial crisis started somewhere in mid-2007. And I just want to highlight this one. You can go to Wikipedia and check it. The contagion spread to the global credit markets by August 2007. Remember this particular month, okay? We'll get to that in the chart. And for cryptocurrencies themselves, if you go Google, Bitcoin and cryptocurrency were born directly from the 2008 global financial crisis. So the crisis started in summer 2007 and it did not end till the next year. All right, that's the backdrop, that's the history. So going back to the charts, what I'm going to show you is not these crypto charts, but the macro charts. So a very important thing here, a lot of people have been talking about the Japanese interest rate, yeah? This one. So this is where we are now. Let's go back to the monthly. It has pumped up quite a bit. 0.075 doesn't look a lot, compared to the US interest rates, right? It's not even 1%. However, when you look at this chart, we go all the way back to the global financial crisis period. Okay, that's when the last time Japanese interest rate was above zero. At a very long period of time since 2016, it was actually below zero. What's the importance of this? Remember the history we talked about just now. 2007, mid-2007, okay? It was right there. Over here. Okay, let me do this and see whether it works. Yeah, right over there. This is 2007 August. Okay, now we overlay that with the US interest rate. Not this, but this. Fed's funds. Let's do it again because I want to have this. So look at what's happening over here, right? They started to bring interest rate down, the US, but Japanese didn't do it until almost a year later. So that's August the 8th. So in order to make it easier for you to see, sorry about that, let's do it again. So I'll have to borrow this little tag over here. So what I'm going to do is pointing to some key dates. All right, this is July 07. It was the very last time that the rate stayed at that height. And then when things goes wrong, the rate started to decline. All right, and then the next one over here is the Japanese. Okay, the rate stayed high until the point 14 months later, September 08. All right, these text seems to be a bit small for you. Let me try to get another one. Let's do this. This one should make it easier for you. Yeah, September 08, that was the Japanese rate starting to come down. That was the US, okay, July 07. That's the very last month the rates stay at that height. There's 14 months gap. Fast forward to where we are now. You know, that's where it gets scary for some people, because here, let's bring this as well. So we are at a similar period. So August 2024, let's bring it over. No. Today the computer is behaving a bit weird. Let's do it again. Yeah, that's where I wanted to go. US again, yeah, August 2024. And then here, the Japanese is still raising, raising the rate. Yeah, it's not end yet. So assuming they're going to do something similar, like what they did 14 months later, that's essentially getting to October. Not October, not even that. So assuming that's 1 year, it should be coming down now, but it doesn't. It kept rising. So that's a question mark when they're going to bring the rate down, okay? It was supposed to be October this year, but they just started to climb. Usually, when you look at this, when they first start to climb, the rate of the Japanese is still high. Okay, it was back then like that. So why I'm showing you this and pointing out the timeline. What happened back then during this period? Obviously something went wrong, right? And if we overlay that with the SPX, and then also the DJI, and not only that, globally, what's going on? DAX, the Japanese Nikkei 255, and Hang Seng Index from Hong Kong, and also KOSPI from Korea. Yeah, it's getting busy, but what's happening over here is that when the US started to lower the interest rate and the Japanese raises their rates, the stock market start to react. They did not start declining in the very beginning. They only started to decline November 2007. So let me move the chart a little. This is where it started to drop. That's November 2007. All right? Everybody started to decline. Now, fast forward to where we are now. We see some of them already started to come down. Let me move this across. The Hang Seng Index started reacting. This guy over here, and then these guys started to struggle at the peak. So it's just starting, okay? Last time, it was about 4 to 5 months before that interest rate drop happened, or after the interest rate drop happened, and then the market started to come down. This time, the rate started dropping, but the market is not reacting yet, at least not as soon. So there are some people already thinking something is going wrong, okay, because of this interest rate action. And then, unfortunately, we still got some hype going on. May it be AI or something else. Okay, back then, there wasn't that much. People smell something's wrong very quickly because of the subprime market issue. But this time, it doesn't seem to have that kind of question or burning issue, brewing, and focus has been all the way into the AI and all those stuff. So the question is, what is the Fed seeing that's making them coming down, or what's tightening the liquidity, what's draining the liquidity? So the unknown is going to cause the subsequent adjustment to the market as a whole. And going back to this, all right, if I take out the Fed funds rate for the time being and just focus on a couple of index, not everybody, just look at the SPX and DJI index, and let's just look at what's happened over here. So let me enlarge the Japanese interest rates so you can visualize it easier. So when the rates climb, even this minor one during 2000, I'm going to draw 3 lines over here. This, when they started to hike, market reacted. When they started to hike, initially it struggled a bit and then it reacted until the point they lowered the rate again, and then it climbed. And fast forward to where we are now. The market hasn't reacted yet, so the rate hasn't peaked. This has peaked, both times have peaked before the market reacts. This time, it hasn't peaked yet. It may peak, I don't know, when the Japanese government thinks they're ready to peak out, right? And if that happens, look at what happened back in the global financial crisis period. It took 450 days, okay, for that to have the first drop. It was still, those markets, all 3 indexes were still high. And then, from the start of the hike to they actually start to decline, it was about 500 days. All right, counting from when they first hiked it, March last year, 500 days. We are already in that. Just that, it hasn't peaked, like I said. From here to the peak, it was only a year, but now it's way over a year. Almost 2 years now. From the point, they started the rate hike. So the timing has been expanded. So I assume the market would react a little bit later as well. You see the time span. Every single time it's been wider and wider. So let me draw this over here. So this was the first time back in around the dot-com bubble. Okay, it's interestingly, all these happened around the financial crisis period. Dot-com bubble, global financial crisis, and now I don't know what we call this. Okay, when it happens, those that are good at writing stories or spreading the news would know. You see the boxes are getting wider and wider. So we haven't peaked out yet. So by the time we peak out, the box would look like this, from the climb to the drop of the rate. All right, so that's why when I look at this, it's giving us some indication that something may happen in the near term or next year. Okay. So going back to altcoins or crypto, I want to show you this. So when we look at the total market cap, including everything, all right? And let's get rid of those indexes. Here, it looks all good, right? We have a bull run started all the way since 2023. And it set all-time high even from a total market cap perspective. However, this is not the end of the story. So if we look at total, excluding stable coins, it was still fine. Not until we get to excluding not excluding the Bitcoin and Ethereum. You see the peak went way lower. All right, let's compare this with total excluding stablecoin. You see the difference over here, right? This one. The money that came in did not get into the altcoins. Altcoins stay at a level that's very similar to 2021 cycle. All right, so, and then, this is not the end of it. That's coming to the thing that I just mentioned in the beginning. What has happened that's new to the crypto market? Remember the Japanese interest rate, yeah? So, unfortunately, I have to swap this because look at the history of crypto, altcoin especially. They started after the global financial crisis, so we can look at it this way. We have to use the Japanese interest rate as the base, so we have all these, and then we overlay that with the altcoin market, excluding Bitcoin, Ethereum, and stablecoin. So, back in global financial crisis, we don't have any reference. We don't know what's going to happen to the crypto market. Okay? And here, the crypto market, let me change it to a different color. Otherwise, it's very difficult for you to see. Let's change it to orange. So, this is the very first time the crypto market has gone through a Japanese rate hike. And I believe you have been hearing a lot of stories about carry trade and all that, right? So, if the stock markets, still remember, what happened to the stock markets, right? Let's just bring in the SPX. Japanese rate hike. The SPX fell. That time, dot-com bubble, same thing. So 2 times in a row. This is the third time in 25 years we are going through the same thing again. This time, the rate is even higher than the previous 2 times. Okay, and crypto is going through it the very first time. So this is something that nobody in crypto has experienced before. And that's the scary part of it. Okay? So with all this, as a backdrop, going back to what I was showing you with the total market cap. All right, total free ES. If you want to check it, you can check it yourself. What's going on here? You know I like to draw trend lines, right? So during 2017, that particular distribution, there was a trend that started somewhere in May 2017 and lasted till the next year, June next year, and then it dropped to the accumulation cycle. All right. Again, 2021 cycle. It started somewhere around April 2020. And if you draw a line somewhere around here, right after the backup and last point of support period, that's somewhere near the end of 2020, okay? And it started to drop May next year. You know, these time frame doesn't matter. The key thing is that what I'm trying to show you is from the point that it started to get into distribution. If we draw trend lines across this, we are getting very close to a point where this is going to drop through the support. Look at what happened over here. All right. It did not go through the very first time. It tested for 4 months. From January 2022 all the way to April. It was still staying high up. This time, because of whatever reason, money printing, low, like all that, it's just basically extending the period. All right, it tried first time, second time, you know, this was the second time, and then eventually we're in the third time. And look at the market cap. It just continued to decline, okay? So while it looks like Bitcoin and Ethereum isn't dropping as bad as the altcoins. If you just look at the altcoin, this time, not only we don't really have an altcoin season, the peak of the market cap was actually lower, you know, when it closes, of course. If you just look at the wicks or the line chart, you know, you see it's clearly lower than the 2021 period. All right, so this, when we look at individual coins, we probably don't notice because it's mixed. So some altcoins are having higher highs, okay, and some have dropped to like around 10% or 5% of their 2021 peak. So going back to where we are now, we are at a very risky period. So when this line is broken, looking at these candlesticks right here, and the volume combining with the Japanese interest rate backdrop that I just mentioned, okay, the crypto industry hasn't experienced this before. Look at how flat it was. It was a negative interest rate period. So if this really reacts like the I just want to bring this up again, the stock market, which it's slowly flattening, it hasn't dropped yet. All right, unfortunately, yeah, we don't know when what will happen to crypto when it happens, because the previous two financial crises told us when Japanese rates climbed, those indexes are reacting. And are they going to do the same the third time again? Okay, it very soon we'll find out, because I already showed you within a year they will react. Okay, so this is the unfortunate news or the cruel truth that we're going through right now. Even though you're seeing individual coins continue to decline in price, it's not the full story yet, and it may not be over yet. Okay, if it really comes down to, let's say, assuming that you ask how bad it would be. People would like to know. The reference we have over here with the very short history of crypto, especially altcoin, for about, not even, when you look at this, it started 2014, not even 15 years. So just about 10 years. Let's just look at these mega distributions. So 2017, okay, when we draw this line over here, when 2021 dropped, the accumulation cycle ended around the peak of 2017. Okay, this time, the money came in as of similar scale as 2021. Would it end up coming down to accumulate again at a similar level? If it does, then there's still about 50% of liquidity that's going to be drained. Okay, we're still at the 500, mid 500 billion level for altcoins. If it comes down to the mid 200 billion, that's where we're going to end up, somewhere near the 2022-23 cycle. When that happens, if the project that you have been following, okay, let's pick an example. Let's say AVE. Okay, it has gone through that period, or 2002-2003. Currently, it's still staying above that level. For these kind of cases, it's not surprising for it to come down to those supports or the previous accumulation levels. However, if your project is particularly new, like this case, okay, not saying in particular, I'm just putting in an example, okay, because individual projects are different depending on the narrative and what the team is delivering. So if we don't have a history of that in 2002-2003, that's why I always mention in the individual analysis session with that particular project that's younger than 2 years old, that's going to be a very risky thing to do, especially if you try to analyze it, because the price profile or the risks or the crisis that have gone through, you basically have no reference where or how deep they can adjust to. All right, they have just gone through the less stormy period. I wouldn't say 2004-2005 was particularly good, but at least there was some spikes and like distribution period. But then compared to the 2017 or 2021, this cycle is nothing too spectacular. We already seen that, right? For the total market cap. That explains why it seems like it's quite disappointing. Sorry, not years, 3 years. Quite disappointing for a lot of you, like why my coin isn't launching or hasn't launched to the moon this time, or it just orbited around the earth and then it came down. All right, this market cap explained a lot. When the volume of water you get is more or less the same, all right, compared to 2021, but you have a whole lot of other projects that everybody is sprinkling their money into, and that ends up everybody gets a lower peak, or at least most of them. All right, so to sum it up, going back to the chart that with the Japanese interest rate, just want to start from this. Because this is where this is our biggest reference. Okay, this is the northerly or the biggest storm that's brewing. okay, combined with total 3 years, which is the new baby and the SPX, DAX, Hang Seng Index, Nikkei 225, and Coast KO SPI. So, yeah, just to sum up, every time Japanese raised interest rate during the previous two financial crises, dot-com bubble, global financial crisis, those markets, those indexes reacted. This time, we're just in the beginning. And the crypto baby hasn't gone through this kind of wave yet. So in the next 12 months, depending on how long the Japanese is, letting the rate stay that high, we'll soon see what's going to happen to the markets. Not just crypto, but everything. Okay? Thanks for joining me. See you in future sessions.